This is Justin Pulitzer. This is my weekend review video for Sunday, June 28th, 2015. A decent amount to cover, although I'm going to try and make the video a bit shorter than usual. I know they've been getting a little bit long. So let's jump in and just discuss what's going on. So the S&P had broken out of the downtrend line here and now is falling back, obviously on some terror news as well as rate hike increase fears, and the one that's sort of the disaster du jour, which is the Greek default, or the potential Greek default and potential Greek exit from the Eurozone. So I don't want to get too much into the nitty-gritty of what that's, of making the sausage, so to speak, but I will discuss it in terms of technicals and some things you might anticipate hearing in the next day, in the few days to come. So a quick brief thing about Greece. So they have a debt payment due on the 30th, which is Tuesday, to the IMF, and the Greeks have decided to hold a referendum hearing, vote, and they're scheduled that for July 5th. So they would technically be in default before they'd be voting on anything. The Troika has basically denied the Greeks emergency funding. That's the European Commission, European Central Bank, and the IMF. And they are trying to, squeeze Greece into making a deal. I believe, Greece has a government that's communist, and they ran on the premise that they would be sort of playing hardball with the Troika, and I guess the Troika decided to play hardball back with Greece. So as of now, the Greek banks and markets are going to be closed on Monday, and probably I've read some headlines here for potentially an entire week, I would imagine, before the referendum, if they can hold out that long. So let's take a look at the technicals here. We've held roughly around this 100-day moving average. On Friday, we did it again. The SPY looks a little bit weaker than the cash because there was a dividend here that was paid, but I always like to use this as a lot of people trade in SPY, not as many in the cash as far as retail traders go, and that's primarily, I would assume, who's my audience, so I like to stick to the SPY. So you can see that this was the breakout area of the consolidation, this 208.97, and this is going to be really key between here and these lows here. Let's say this 207.69 to 207.79. These are sort of like a double bottom low. And I think if we take out this area, it's going to be a fairly quick gap, or I should say air pocket, down to the 200-day moving average, and potentially to these lows down close to 204, 205. There's a lot of open interest. This week's a little bit different than usual. We have a quarterly expiration, and I was looking at the weekly expiration, and they didn't look as conclusive to me as the quarterlies. The quarterlies, obviously the weeklies are going to change significantly with a lot of volume that probably will flow in the next couple of days. But with 2 days to go for the quarterly, the 207 strike as well, which is roughly around here, which is these lows, and the 205 strike have a lot of open interest, and that's right around the 200-day moving average, which, how apropos. I've been playing this with put ratios that actually expire in the 2 days. I believe I have on the 208, 205, so that should be a catbird seat there, which should be nice. I also have a little bit of a TLT long on. I'll discuss that in a little bit. Not a big position, but a little bit of a tester. I'll discuss that, like I said, in a bit. Anyhow, these are really key levels. If we do wind up taking these out, I would think intraday this is going to be a big point of contention. And if it knifes through that, these lows are going to be targeted, the 200-day, and potentially to filling up the triangle down to these lows, which is also the 61.8 Fibonacci retracement in range, the 203.94. Now, getting beyond that, there are some other lows. I mean, obviously, where the move started down here, which is also the 50% Fibonacci, 100% Fibonacci of the entire range here, but also the 50% from that 9% correction. I don't want to get into that because I don't necessarily think that we're going to see that in the next week or so. I think it's sort of outside the scope of this video, and it's thinking a little bit too far in advance. Let's tangle with this. Maybe we'll do an adjustment if levels need to be adjusted, or we need to look at further scope in the periscope that I would obviously do on Wednesday or Thursday. I haven't decided which day yet. So anyhow, that's my levels in SPY. If we happen to disappoint the bears and we rally back up, I think that is going to catch a lot of people off sides here as far as what they might do on Monday. The futures haven't opened yet. I haven't really taken a look at it. Considering the European weakness, I would imagine the euro is probably getting smacked a little bit. That just being because there's going to probably be more QE and liquidity flooded in, assuming that there is a Greek default, or at least the fears of the continued Greek default. So that might also put some pressure on the dollar going to go higher. But anyway, that's neither here nor there. We're talking about the S&P. So I think if we can get back above this 211.27 level, that's sort of more terra firma as far as for the upper distribution. So anywhere between this 211.27 and 212.09, above there gets real bullish. Anything below there is sort of a little bit weaker and a little bit more suspect, but I would say that this is sort of the don't cross range for higher prices. If we start getting below this 208.97, which we might very well do in a gap, I would be very careful with longs if we start losing this 207.69, because then I think that once the 100-day is broken, the sort of the intelligentsia consensus is going to try and push it to the 200. So that's my take on SPY. IWM has been much stronger. I've discussed that. We are still above the old highs. This might not be the case on Monday if there is weakness. We kind of hit the backside of this old up channel here. We've been riding that, and we tried to pierce into it, and there's been some responsive selling back. If we lose this 127.13, then I would say IWM might have a little bit of room down to the 50-day moving average, which is also roughly about mid-range here of the breakout. So that is what I'd be looking for with IWM. I don't necessarily know how, like I said, if I had a crystal ball, I would say I know how this is going to play out, but this is where I would be thinking there should be some support. You can see that the 50-day on either side of it here, it was mostly trading above it. So the 50 to me would be a good spot for some responsive right or right out long action, and if you're short, maybe some right or right out covering. Qs. Excuse me. So Qs are roughly around the 50-day, slightly below the 109.42, and I think some of that has to do with some of the weakness that has been happening in Apple and Google, and you can see we're sort of setting up for a bit of this like triple top pattern, although this could be forming a W with sort of like an inverse head and shoulders within the pattern. I mean, it's sort of just a lot of chop. I think this is just doing a lot of sideways working off of range. So if we do wind up coming down, the 100-day is roughly around 108. You can see that there was some reference lows there. But I would say the more sustainable area to sort of start trying to buy the dip, so to speak, if there is some real ugliness in the next few days, would be roughly somewhere between these 104s and these 106s. Somewhere in this range, I think we'll catch this market here, and there will be a tradable low for a bounce. If you want to do something with put ratios or put spreads, I would say that down here, these lower terminus strikes, particularly this 104, considering it's close to the 61.8 down here at this 103.87, would be a great short strike in terms of where you might be looking to close the short, or to get long. Some of the weakness, I think, in this has been as attributed to Apple. You can see it's starting to make from up here. I have some alerts set, but you can see lower highs, but not really much lower lows. These are sort of slightly higher or equal. This is just a lot of chop to me in the zone. If there's some type of early weakness because of Greece, somewhere between this like 123, these reference lows, and 120-ish, like in the lower 120, somewhere between 120 and 123, if there is some type of real serious selling, that to me would be the great right or right out long type of a trade, because we all know that the 119.17 was the breakout. I don't necessarily know if we're going to see that. It may just want to come down and reping here. If we can take out this sort of reversal bar, this was a day, I believe Icon was sort of talking up Apple, and you can see where she stopped, 129.80, and we all know that I think that below 129.85 is a little bit vulnerable. Anything above 129.85 to me is more bullish. Anything below there is more vulnerable. So that is the key, and that's what I'm thinking with Apple. But some of this weakness is what's probably, or I shouldn't say probably, what is definitely translating into the weakness in the Qs. Google is sitting right on some moving average confluence here. If we were going to open up sort of flattish on Monday, I would be saying that this would be a great right or right out area for a buy the dip and play it maybe against the 200-day moving average as your sort of stop. You could see all of them except the 200 are sort of back pointing up, so this to me would be a decent right or right out area. That said, the wild card of Greece may want to even take it down and retest some of the mid-range or some of the lower part of the range, but I did like that it was starting to break out here. It looks like there was just some responsive selling, a bit of a false breakout, and sort of like a retest. This 553 area to 545 has been really key. Anything above that to me is a little bit more bullish. Anything below is more bearish. VIX. Let's talk VIX. So the VIX, I've discussed here, slightly higher low, failure at the old trend line. We're still below the 200-day moving average. I expect because of Greece, this will probably get a little bit of pop, and we'll have to see how that handles these areas. Really, if you're bullish, you don't really want to see this start making higher highs and then making higher lows. I would start getting a little bit more concerned as far as the sort of volatility transitioning if we can get back above these sort of double highs up here around the 1720. You can see a double top there, and since then it's just been making lower highs and sort of lower lows, although here it's maybe starting to turn. We'll have to see how that goes. A little IV wouldn't be so terrible. That would make it a little bit more opportune to sell some premium. I've been saying it's more of a buy premium for directional play considering it's been so low. When IV starts getting more expensive, it starts making more sense to selling it when it's expensive. TLT. So I had mentioned here that I thought that this was a long, and I did a little bit of a trade entry. It's gone up, and then it promptly came back down, unfortunately. I still have some of this long. I've said that I think that the 1.618 Fibonacci extension down to 113.37 would be a good right or right out area. Down here, also a channel low. I'll be selling some out of the money puts to subsidize my call spread. I had sold some puts here, bought them back up here, but I had left on most of the call spread here. So I don't have the short puts, so my risk is defined, but I'll be looking to sell some more puts if we have some type of a gap down into this area. If we gap up, and this could be the case because of the Greece situation, I think that there could be some room, believe it or not, even up to 121, which is the 50-day moving average. That would be absolutely lovely for my trade. I was sort of looking for the 61.8 Fibonacci retracement, which is up at 120.40. So this might play in well. It might even exceed that because you could look how much chop there was here. So there could be a move even higher to the channel highs. But I'm not necessarily sure that we're going to see that. I want to kind of play it by ear. First, we'd have to be taking out this 119s and the 120s. The really key fulcrum, so somewhat pivot, is this 117. We are currently closed below it. We'll have to see how that goes earlier next week. If we can clear the 117s, that would be very much of a nice confirmation for the lower for longer thesis. IBB. Powered back up, made new highs here, pulling back, retesting the breakout area here. Wouldn't shock me to see it come back a little bit, even halfway into the mid-range. That sometimes happens. There's a big volume node here. So I'll sort of reevaluate it if we get here. I have some, but you can see the thing I like is that we're starting to make higher lows and now sort of higher highs on the leg, which is good. So I would be thinking that IBB might set up for some type of a buy somewhere a little bit lower. This might snap the sort of wedge it's in. If it happens, then I would be looking for sort of lows maybe to sort of trade against. I'm thinking though just mid-range here, somewhere that will coincide with the 50-day moving average at least for now. Gilead is one I've been looking for a re-entry in. It got the channel top I had been discussing. That was also the 1.618 Fibonacci extension up to 122.33. It did shoot through there a little bit, but we are responsively pulling back. I would think at the very least a pullback into mid-range would be nice, maybe a 50-day moving average confluence to set up to either BTD, buy the dip, or to sell some out of the money puts into. It's also possible that if there is more of a steep market sell-off and the earnings are coming up, that it could get the channel low, but I wouldn't really be playing for that. What I will be looking to do is to play some type of a put ratio for a move down mid-range, maybe like somewhere with like between 108 and 110 is the lower strike puts if we get some acceleration down in the next few days. Remember, you always want to do those put ratios when you're getting some acceleration so the IV can crank so you can get your spread wider. Like if you can normally do 1 or 2 or 3 points, maybe now you're doing 3 to 5 points wide, which obviously increases the probability of success because you don't have to land on a pinhead, so to speak. Oops, BIIB. So Biogen came back up, roughly got into the gap fill range, coming back down. I would say 50-day to 20-day moving average confluence down here would be a great right or right out buy, or on momentum back up over this 421, let's say. If you can get that, then I would say that these highs up here in the 432s and potentially the previous channel low would be in play, believe it or not. So we'll see how that went. This overshot here, now we overshot to the downside. I think this is just sort of a muddle situation. I definitely prefer the Gilead chart over the Biogen chart, though. Jets, this is the airline ETF. It's a little bit young, but you can see it's sort of trying to form a inverse head and shoulders a little bit. We'll know early next week if it can hold this 22.56 level on some weakness. If so, I would say that that's a good right or right area. Or if you want to play it more conservatively, wait for the neckline break of somewhere over 23.63 to 23.74. Somewhere over here, I would say would confirm the inverse head and shoulders. Let me try and draw that out for you. Makes it a little bit easier. Here's the left shoulder. Here's the head. This would potentially here be the right shoulder. If it bottoms even ahead of here, that's even still more bullish. That would be a good area for me. So we're gonna be keeping our eye on that. With regard to airlines, Delta showing a similar pattern. See, left shoulder, head, right shoulder potentially, although making lower highs. Not my favorite pattern. American Airlines, same thing, but also with lower highs. The bell of the ball is JetBlue. With regard to its chart, you can see, oops, that's the head. Here's your left shoulder, potential right shoulder. But the thing that's different here is look where this is. This potential right shoulder is higher than the left. It's over the downtrend line, and we are very close to the all-time high. The other ones are a country mile away. They've been absolutely slammed. Something's going on, in my opinion, with JetBlue. That's the one I've been playing. I have a call spread on. I think it's like 21.25 or 22.25. I have to check. I think it's 21.25, and it's like 80-something days to expiration, and it wound up costing me like $1 or something. No big deal. I'm up a little bit on it. I think it should work. That's sort of the way I'm playing it. Ambarella, this was sort of the disaster du jour last week. It came down really hard, got close to these 61.8 Fibonacci retracements, and then proceeded to bounce. I don't know necessarily that this is going to make it all the way back up. It is already sort of having a bit of an engulfing pattern and on its way down. I would be looking to buy this on a primary trend, on a trend touch down here, somewhere in the 83 area, or even lower with really primary trend, somewhere in the 60s. But I really think that would take earnings, and their earnings were pretty good, back here. The stock went up. That's the story. You also have a 50-day moving average coming up soon. So I would think if this can hold as a successful double test, that to me would be a good right or right out play, or to play it sort of long down somewhere in this area where there's either a trend or the breakout down at 77. That's a long, long way to go. But please keep in mind, this thing did go parabolic. This low should be a good low if the bulls are going to hold it. If not, we will see. I'm sort of just sidelined on this. The spreads and the options are like a country mile. You could drive a truck through them. Not a lot of liquidity, so not one I really like to play. I like playing ones that have a lot of liquidity. I wasn't planning on covering it, but I will because all you guys like it. GoPro. 5406. That is I had been saying here that I thought that there was maybe some more room to the upside, but it was starting to get a little bit for me. and I don't really like their management or their story. So the close was 54.13 on Friday, so sort of just held it. I'd be willing to give it a little bit of downside here to the 50-day and the trend confluence down at 52s. But if you start breaking these reference lows here, like let's just say 52-ish, GTFO, you'll be coming from lower highs, then starting to make lower lows, and you could start thinking about maybe filling up triangles with snaps lower. I'm not a huge fan of their product. I don't really believe it's anything proprietary. I think Apple and that Samsung and the other one, Xiaomi, I think they're gunning for them. I think they have a product that's like a quarter of the price, and it's like equally as good. They did some tests, and they wound up being like almost identical. Amazon, kind of bullish pattern, just holding up here. Probably, you can see it's sort of slipping. It's retesting sort of the backside of the prior up channel. There could be some slippage lower. The key level to be above in Amazon is 439. Above that is bullish. Below it is, less bullish. I would say more bearish. Kind of look above, sort of pulling back. 50-day could be a setup, or these reference lows. I don't know that it's going to come back and fill up all the gap. I have been saying for a while I think Amazon is going to see the 1.618 up at 484.73. Just keep in mind it's a little strange time of year for that to happen. Usually that happens a little bit later in the year when retail sort of accelerates. Speaking of retail, this thing is just a pig, right? This BABA. It started to look pretty good here. I thought we were going to get a little more to the 78s to 100, maybe at least to fill this gap. But it had other ideas. It's making lower highs and lower lows. It's taken out this area here of this 84.91. The one thing I will say that this might have going for it is the Chinese, and I forgot to mention this earlier, the Chinese central bank cut interest rates by 1/4 point. Their stock market ran huge. It's been pulling back rather swiftly lately as well. And they are now sort of in a rate cutting cycle. So that might be a little bit of support for these Chinese stocks. BIDU hasn't really behaved particularly well. You can see it broke down out of range here, had a bit of a check back, came back up to kind of close to fill the gap mid-range here. I had really been looking for a full gap fill to short, although it kind of fell apart below already. It's sort of breaking trend here. I don't really see this as much of a touch if you're long. This 199.70 to 202.20 is sort of the must hold. Anything below there to me starts getting kind of fugly, and you'll probably be looking to retest the lows. I'd be looking to do some type of a put spread or even some type of a put ratio to play that. I think that will work well. Facebook, all right. Look at this. Even with the junky market and all the stuff that is taken place, Facebook is making new all-time highs. Like I've said, a bunch of times, I think that the new Snapchat IPO in particular is going to show just how cheap Instagram was purchased for and the value there. They're going to be monetizing. I believe they have a lot of stuff going on, including accelerated revenue growth and stealing share from Google. If there is any type of weakness in this stock early because of Greece, I would be looking to buy this, either being short, selling out of the money puts. If the IV picks up, it's a little low right now, so I wouldn't be playing that mess around game, at least with nothing that you're not willing to kind of take some shares on. But I believe that 83 to 84 is sort of the new must-hold area. There could be some slippage back down to 82s if the market gets a little bit, iffy. But I do believe down in this area it should hold. You can see previous declines were roughly about $8 or so. So 89, this would basically be down to the 61.8. That would be absolutely perfect if we can get some re-entries down there. I don't know if people who chased it will be so happy about that, but for the loyal and faithful, so to speak, of Facebook, a pullback here would be a little bit healthy. The alternative would be to work off some of this excess, just moving sideways, and then looking to buy up over this high, if it chops for a week. But let's see if it can flag out. I still think the stock's going to 100. It just might need a little bit of a breather before it gets there. Twitter starting to look, it just looks crappy, right? I mean, it's this 34.62 is sort of the must hold here. It's kind of pinging here. I did say that I think this low should be considered quote unquote a secure low that you can play long against because it's bookended. You can see that the prior day's low and the preceding day low are higher lows, and then we went a bit higher. So if you're playing long, this 33.51 low, that's really your stop out. I'd be a little bit cautious below 34.62. I do think at some point this somehow gets back up to the 45 area. I don't know what was going to do that. Buyout rumors or maybe an actual buyout. We'll see. Maybe some profits. That would be nice. I mean, look at the news cycle is so behind on regular traditional media. It's blowing up, though, like with this whole Greece thing on Twitter. They just need to figure out how to monetize this stuff already. We'll see how that goes. So another one, a big term theme, is the cybersecurity stocks. These companies, I believe, have the news cycle at their backs, their backwind. I had said that we were getting a little close up to here, looking at book profits, and now I'm just looking to get back in at the retest of the breakout. So somewhere in the mid-40s, somewhere between 44s and 46s, I think this area would be a great right or right out type of a play. It would be even better if it got down to the channel, which was, by the time it gets there, roughly would be around the 61.8 confluence here, around the 44s. So fingers crossed that we see that. I'm not so sure that we will. Somewhere between, like I said, 44s, 46s, I think is the BTD spot for RoRo, right or right out. CyberArk, same kind of stuff. This has been holding up pretty well. 50-day moving average, back of a prior channel. Key area, might see it come down a little bit more, maybe to this volume distribution and some of these reference lows here. I would think that I actually prefer FireEye to CyberArk just because the chart's a little bit cleaner in terms of where to play, so to speak. But I think that this should set up also. I mean, it's sort of just which way, 6 of one, half a dozen of the other. I think they're all eventually going higher. The only one thing I will caution about CyberArk is it's a very small stock with a small float, so that's probably what's been keeping it up. It's also very expensive in terms of their earnings. The belle of the ball is this Palo Alto network. You can see, I've said this now multiple times, the 50-day moving average has been really rock solid support. If there's some weakness early this week, I am going to be looking for the 50-day moving average to either buy the dip via stock and or sell out of the money puts, maybe down like in this area where there was the real breakout. So that's my thinking in terms of those stocks. Netflix, icon is out. Pretty big reversal. I think anyone, honestly, who is buying this stock up on a stock split that everyone knew about and was paying up $20 kind of deserves what they got if they got themselves squished here. I believe the stock has some pullback. I've been talking about this stock on the stream, and I said that typically after an icon exit, there's an 80-point pullback. That would roughly take the stock down to 626s, which is also the backside of the prior up channel, and maybe would somewhere between there and the 50-day moving average. I think we'll set up for some type of a right or right out, some right or right out action. That is what I'm thinking. I might even be like looking to initiate here there with maybe selling a put spread actually, capping the risk, but still looking for the stock to bounce and doing it with relatively controlled risk. Price line, not one I hear people talk about much this lately. I think they've been getting their what's handed to them. I do believe that somewhere in here there should be some responsive action. If not, maybe it'll be down at the 61.8 fib. But I am looking for this stock to kind of just chop and be tough until after their earnings. The stochastics are a bit bombed out. I mean, if you want to try and play it long, you got to kind of wait for it to reverse the pattern. You can see it's just sort of lower highs and lower lows. You got to wait for that pattern to shift, in my opinion. I'd rather be a little late and buy it when the momentum changes than try to be a pioneer and catch something that's not really sort of in favor at the moment. That'll probably be after the quarter ends this week, if anything, at the earliest. TASR, long-term play, also sort of like a longer-term theme, like the cybersecurity stocks. They make the body cameras, and with all that's gone on in Ferguson and in Baltimore, I think that this stock is going to have years of growth in government contracts. Just some responsive sellers up at the all-time highs. It's just been consolidating, bull flagging pretty well. If this is down early this week because of Greece, yeah, good luck. I'll be looking to be a buyer somewhere down in probably this area, in the lower 30s. If I could get this in the lower 30s or the mid to high 20s, I would be ecstatic. So that is my thinking with TASR. I think the stock will eventually work its way higher, but by the dip, no chasing the rips, not on this tape. We don't. Tesla, yeah, the SpaceX had something blow up. I don't really. Some people were asking me on the stream if this has anything to do with Tesla. Yeah, Elon Musk owns SpaceX, but that has nothing to do with Tesla. So anything above 265 to me puts the all-time highs in play, which is up here in the 291s. Let me see if I can change the time frame on this SOB. You motorboating SOB, you. All right, so this had been the old high in Tesla before this sort of move here on China news, and then it wound up getting taken down. So I think that this stock sets up for a buy the dip type of a situation. It has moved a lot here already, so if you haven't already been in it, be a little bit careful. I do, though, believe that it is by the dip. You know, maybe even a 50-day touch would be nice, but I do think it's going to see the old all-time high, and I know I'm going to sound crazy, but I believe it may see some Fibonacci extensions if it can exceed these highs, and those would be the 1.272, which takes it up to 321.35, and the good old 1.618, which would be 359.41. The way to measure that is you take this high, you minus this low, you take that amount of that dollar amount, you multiply it by these extensions, and then you add it on to the low. You take the high to the low, add them, like I said, take that, multiply it, and then add it to the low, and that's how you get up to the Fibonacci extensions. Very simple. I do believe that up here will be some selling resistance between here and 300, but if we can clear there, it will get up to these extensions. And I would be really surprised, given my view on oil, which I think is going higher, if we didn't see the old all-time high. Like I said, though, buy the dips, no chasing, not on this tape, not with the headline bombs from Greece and God knows what else. Anyhow, that's my story. I'm sticking to it. Be sure to follow me on Twitter. My handle is @JustinPulitzer. Be sure to hit the like button. It's right below this video. If you found this useful, comments are always helpful. And please hit the subscribe button. That way you'll get notifications when I post these videos and my Periscope rebroadcasts. I'm going to post the link to this week's in the description down below. Anyhow, let's have a good week, and cheers.